Thank you very much, Evan. And thanks to everyone listening in today. I'm very happy to be here today talking to you. I'm going to talking about applying behavioral science to improve financial well-being. And my name is Stina Söderqvist. I'm head of behavioral science at Economy, based in Sweden. I have a background in psychology and a PhD in cognitive neuroscience from Karolinska Institute here in Sweden. And I've been working for over a decade now with applying this insights and knowledge from behavioral science into building products, digital products, particularly focusing on financial products and experiences. So that is my role as head of behavioral science at Economy. And I'll just tell you now a little bit more about who Economy are and what we are doing. We are, as I said, a company based in Stockholm, Sweden, but active and live globally. We have a B2B2C model, providing an engagement platform that helps financial institutions to deliver more responsible banking that encourages users to change their financial behaviors and their consumption habits. And this is to provide a more sustainable behavior and a behavior that benefits both the customers, the end users, financial well-being, but also a more sustainable consumption with regards to the climate impact of that consumption. So we have two major categories of a group of product features. So the first one is impact finance, and this will be my focus today. And this set of features focuses primarily on building financial well-being, and it does this by increasing savings and investments of bank customers. It includes features of saving goals. It includes tools that help customers and users create more mindful consumption habits. It also includes features of investments, allowing users to invest their money, and also segmentation so that we can understand who the users are and tailor the experience towards their needs and desires. The impact transaction group of features is focusing more on the climate impact. It includes a carbon calculator that allows users to gain an understanding of how their consumption impacts their own carbon footprint. And it also includes an engagement service, with features that are helping the users to take action and create a bridge between the knowledge gained from the carbon calculator and the actions that will help them reduce their climate impact. So then, to dig a bit deeper into the work that I'm doing, the behavioral science part, a first question that might be valid to answer is that why do we want to work with behavioral science? Why has Economy decided to have a head of behavioral science employed? Well, it all comes down to the impact that we want to have. As I mentioned, there are two fundamental areas that we want to impact. We want to impact the financial well-being of users, and we want to impact and contribute to a sustainable climate going forward. Those are two big topics. And to achieve this, we really need to encourage some behavioral change of users. And for us to be able to get to that behavioral change, we have learned that we need to really be able to engage the users. And we need to be able to engage them first within the product in a way that will allow us to have the user present in the product so that they see the information we are presenting. They're getting the experience we want them to get. But we also need to engage them beyond the product, out in the real world, so to speak. This is where they will make the decisions about how they consume and how they actually spend their money. And for us to be able to get there, we need to do more than to just nudge people towards a certain one-time decision or a certain usage of our product. So we can help them understand how they should consume in order to save more money. We can help them set up a savings plan within the product. But for them to then actually change the way they're spending so that they have the money available for to save going forward, we need to do more. We need to engage them in a way that they change their behaviors in their everyday life. So we all know this from other areas of life, right? We can get the information and the plan. We can get the information of what we should do to benefit some areas of our life, and we can get help setting up a plan to do that. Whether it's being exercising more, eating more healthfully, or saving money. But then we all know that people in general, me for sure, I'm sure you who's listening can recognize this as well. We struggle to actually do this. And this is the intention action gap that's often discussed in behavioral science, and is absolutely key for us to understand and be able to work with to overcome. Because the intention is that we can help users set up a savings plan, for example, won't mean anything unless they will also take the action. And what this intention action gap tells us is that information often is not enough when it's on its own. It can be crucial. We need to have an understanding of what to do, and we need to understand why to do it. But unless there's more to it, it's just far too common that we don't make the next step and actually create action from it. And this is where behavioral science really plays an important role, because this can help us understand what else is needed in order for us to help users move from intention to action. They can help us identify the barriers that are stopping people from taking action, and identifying these barriers and how we can start working with them. So it means that we can meet people where they are more, and we can help them change their behaviors based on their own terms. And our focus on this has been key throughout our whole company's existence. Is at the very core of what we're doing. And it differs quite a lot from how traditional PFM tools work, for example. They tend to focus a lot on presenting numbers and insights to the users and expecting them to change the results. Whereas our focus has been from start to understand and work with users' emotions. Because we know that money and finances and consumptions, they're all very emotional for people. And these emotions shape our behaviors in a fundamental way. It cannot be overestimated how important these emotions are. I want to briefly talk about two key areas of emotions that I see as particularly important and are important to understand for us when we work with this. The first one is rewards, and the second will be stress. Let's start with rewards then. We like to do more of what makes us feel good. It's as simple as that. But this is actually a really important function of the rewards in our brain. Because when you look at the biology of it, the function of rewards is to a great extent to tell us that a certain behavior or a certain experience is something that is good for us and something that we should repeat. And it actually helps by making a rewarding behavior more easy to learn and more easy to remember. And therefore, it also more easily turns the behavior into a habit. It's something that we want to repeat, so we repeat it, and we continue to repeat it until it becomes a habit. And this has been fine throughout evolution, where, food was scarce and social belonging was absolutely crucial for our survival. We needed this. This helped us survive. The problem is now that we live in a society where things that are good for us and our survival is now more often present in such abundance that we tend to overconsume it in a way that's no longer good for us. Because our brain hasn't adapted to teach us to consume this in moderation. It keeps getting excited about all the food and the very high energy food that's surrounding us. And it keeps telling us to eat it. And it keeps telling us to enjoy it and therefore repeat it. And consumption is actually very similar. There's a reason why it's talked about as retail therapy. Because consumption actually makes us feel good. It activates regions of the brains that are linked to rewards. And when you see campaigns, bargains, or you can pay by buy now, pay later, this helps increase the rewards and make it difficult for the brain to appreciate the consequences even more. And consumption is it does even more to us than the immediate reward. It also helps contribute to strengthening our identity, and it helps us adhere to social norms or strengthen our social belonging. A lot of our consumption is done in a social setting, whether we are actually surrounded by people doing it or we do it on our own, but with a thought far back in the head that this will somehow improve our status or improve our acceptance within a group. Something that's very important and prioritized by our brains. And, simply put, consumption often makes our life more easy and enjoyable. So there's really no big surprise that we sometimes tend to overconsume. And I think it's really important that we understand this because it creates an understanding of why our users might be struggling to save money or why they might be struggling to invest money. And we need to understand it to also be able to counteract it and think about, well, how can we then make finances and caring for your finances more rewarding? How can that contribute to pleasure in someone's life? So the second group of emotional influence that I want to talk about is that of financial stress. This is, of course, something that can result from overspending. Also, from increased cost of living that we have seen during the last few years, or simply not having enough money to spend as a start. And we know that this is very common. There are just some two statistics that show this, one from the US and one from South Africa, where we see that the majority of people answering these surveys report that financial stress is actually something that impacts their physical and mental health. It's very common, it's very present, and it has serious consequences. And this is important for us to understand because it actually, to a great extent, influences how we make decisions and how we behave. Because a great pool of literature shows that financial stress actually reduces our cognitive bandwidth. So it actually impacts our ability to make good decisions, to understand information, to process information, which is, of course, important if we are the ones contributing or if we are the ones providing users with that information. We need to think about how can we make that more simple for users to understand, and how can we help reduce the stress. And it also reduces our emotional bandwidth in the sense that when we experience this sense of scarcity, that we feel that we do not have enough of something, we become very narrow-minded. We become preoccupied by this topic. So we have difficulty thinking about other aspects of life, or more importantly, it becomes much more difficult to think long term. We become much more prone to go for the short term wins and the short term solutions to our money, to our problems. And as we know, with money, that often is not a great recipe for long term financial stability and wealth. This is important for us to understand and think about how can we help reduce the level of stress for our users. This is to a great extent what we have been working with at the economy. And I'll go over some of the key insights that we have been working with from behavioral science, and how show examples of how we apply that in our product. So to start off with, I want to talk about the why, helping ask the question to users of why do you want to save? Why do you want to invest money? And to do this in an effective way, we need to understand motivation. So the research field of motivation is a very big and exciting field. So I'll just cover it very superficially here. But on a simplified level, we can talk about motivation as when you have a motivational driver towards a certain goal. There can be different characteristics and different qualities of that motivation. And you can think about it as a continuum, where on the one side you have motivation that's deeply linked to your internal values or your internal needs and desires. This is something that when you work towards something that you truly care about, perhaps you even enjoy the task in itself. So you get enjoyment out of doing whatever action that is taking you towards your goal. If you look at the other side of the continuum, you have external motivation. This is when your motivational driver towards a goal is more linked to a material reward, or you're doing something just to avoid punishment. You know that if I don't do this, there will be some punishment that follows. But if you didn't have this material reward or the punishment, you wouldn't do the task. And money, in many instances, fall into this category. Just think about your job, for example. How many people would stay at their job if they didn't need the money? And this has been a key insight for us to work with. Okay, so money is not, for most people, not in itself a driver. It's not a driver that's linked to your values or your desires. What is linked to your values and desires is what you can get with the money. Whether that's, experiences that you dream of, whether it's things that you dream of, or if it's a feeling, a sense of stability, a lack of financial stress. So we built upon this and created what we call dreams. And these are basically saving goals designed in a way to enhance the emotional connection to the saving goals. Make it clear to the user to connect their saving attempts and plans to what they really care about, what their desires are. So we created these streams, saving goals that are made very concrete, very emotional when users set them up. And we also made sure to make them fully localizable. And this is important as we work, globally in many different cultures. This is a way for us to allow to adapt these to make them more culturally and contextually relevant, because it needs to, as I mentioned, needs to really speak to, resonate with what the users truly care about. These are also a great way for financial institutions to understand their users more, because they would have a chance to see what their users actually care about, what they dream about, what they plan to do. So you get this intention data, which is really excellent opportunity to then build segmentation, create these user experiences that truly speak to people or meet them where they are. It's also, of course, a very good opportunity for upsell, to understand, well, who is saving for longer terms, and maybe they will be, applicable to invest that money instead. They would actually benefit from investing that money. And this is something that we've the culture adaptation and inspiration of dreams is something that we see and we're learning a lot from as well. We recently got live with a South African partner, and we see some new behaviors of users that we haven't seen elsewhere. For example, a very common dream to save for is a water backup. That's something that we haven't seen in other countries. But what is very important for us, because it also helps us understand the users and where they're coming from and what they're thinking about. And when working with this, we have some important guidance to think about that are based on behavioral science and what we know. And the first one is to inspire and don't prescribe. But we never tell people what they should be saving for. I mean, it's very tempting to tell someone you should have a buffer, because we know that it's really good to have a buffer. But we try to instead inspire them to see that themselves. So how can we, working with their emotions, making them see what is important for them to feel good and get the most out of their money, being inspired. And this is something where the financial institutions, the banks that we work with, have a lot of input and can control themselves based on how they know their market, how they know their customers, what would be the most inspiring things for them to do. And it's, of course, also something that you can test out and see how, what resonates with the users. But it's important to not be prescribing, because then it moves towards the external motivation that I talked about earlier. And we want to keep it close to the users and their internal motivation. An important function is also then to make the dream very personal and very concrete, so that it's something that becomes motivating and resonating with the emotions of the users. We also have a function to make use of the very strong motivator that is social belonging. So quite often you're saving towards a goal that you share with others. So whether it's going on a holiday with your friends, or saving towards a house improvement or a new car with your family members or your partner, you can do this together in this product. And that's very important, because it helps strengthen and make use of, the social pressure, social influence of your friends, and it helps motivate each other. But the second major point in that we want to work with, if we manage to help users connect the why they should save on a deeper level, the next question is then, of course, how should they save? And we know that this is very important to work with, both with regards to the actual practicality of making them see where can they find more money in their everyday life, but also building self-efficacy. So self-efficacy is our own belief in our own ability to reach our goals. So it's whether I actually believe that I am someone who can take care of my finances and someone who can save money. And this is something that we know from research literature is very important in determining how we then succeed working towards this goal. If you lack this self-efficacy, you feel that saving money, or even more commonly investing money, seems to be something that's, quite difficult. You don't believe in your own ability to do it, or it just seems overwhelming or stressful in some manner. When we're experiencing those feelings, we tend to often procrastinate that behavior. So you might be thinking that I know I should be saving towards my pension. I should really set up a, stable investment habit to make sure I can have a comfortable time as a retired. But if you don't really feel confident, or you don't really know how to do this, you're just not gonna feel the energy or like the motivation to do it this day. So you think, I'll do it next month. It doesn't really matter if there's, one month more or less. And that procrastination continues. So this is something that we know is very important for us to be able to target. And the way we do this is by helping users to keep it simple. And this means keeping it simple from a practical perspective. So like really seeing how can you make savings less daunting, less overwhelming? Can you see areas in your life where you can make small changes that would actually help you save money? But it also needs to be emotionally simple. Again, just like how we can't tell people what to save for, we can't tell people what they should save on, because we don't know what is truly important for someone. I often take the example of going out for lunch with your colleagues. For some people, this might be, more caused by you not planning, because in fact you could also eat in the office with other colleagues, and you would have just as good of a time, but you didn't prepare that food or whatever was needed. But for another person, that going out for lunch with their colleagues might be a social highlight. It might be, one of their best things that week. And we can't tell them that they should stop doing that, because even if they did, it wouldn't make them feel good. So it's not something that they would continue doing. So we need to make it realistic, both from a practical perspective, but also an emotional perspective, because that's when it's more likely to be a behavior that is continued. And if we help break it down into smaller steps, there's also a greater chance that the user will actually succeed in changing their behavior and achieving those smaller steps towards the bigger goal. And that achieving those steps will help them feel good about themselves, because they succeeded, and that will feed back into building a self-efficacy that actually I am someone who can save. However little they manage to save, it will make them feel good because they managed to do it. And that will increase the self-efficacy and help them, set longer and bigger goals going forward. And one way of how we do this in our product is we provide this what we call save hacks. And what they are, they're basically these saving tools that help users allocate more money towards their dreams. And this can be done in different ways. It can be, and we also see that this is also somewhere where different preferences of different user groups might prefer different routes. But we have the automatized way. This can be the regular transactions, monthly transactions or weekly transactions that you set up with a, the specified target amount that's transferred every month or so. We also have other automatized tools that, for example, Roundup, that will round up whenever you use your card. When you pay for something, it will round up to the nearest even amount and save that money instead. So something that is happening in the background to help you save with more control. But then we also have the category of lifestyle inspiration. So these are really save hacks that help you see areas where you might be able to change your way of living or your habits to help save money. So it can be to, reduce the amount of takeaway that you tend to buy, start cooking more at home, or it can be skip that takeaway coffee that you might buy on your way to work. And then the third category are the more fun and surprising ways of saving. And we see that these are very popular among customers. And particularly in South Africa, we've seen that this rocket game that we have has been very popular, where users get to play a very simple game within their bank app, and whenever they score in the game, they will save some money. But we also have functions, for example, where you can, instead of go betting on your favorite sports team, you can actually save on your favorite sports team. So whenever your favorite sport team scores a goal, if it's football, or it scores points in some other sport, whether it's cricket or whatever your favorite sport is, you save money. And we have something called the thief, or the squirrel, it's also called in some markets, which mimics this, many of us tend to do small impulsive buys where, you buy a coffee here and you buy a soda there, and you don't really think about those amounts, how they really add up. The squirrel, or the thief, it does the similar, but it saves that money. So it goes in and takes small amount of money randomly. You can set a limit so it doesn't take too much, but randomly throughout the weeks, so you hardly notice it, and it puts towards your savings. And this is usually a great aha moment for users, where they see how this really adds up to become quite significant amounts of saved money in the long run. And something that we also work a lot with is to visualize and reward the progress of users. So whenever they do manage to save money, this is something that we want to make them feel good about. Because if they become rewarded, they feel good about it, that will help increase their self-efficacy, will help them see how their behavior is actually making a change, and it's bringing them towards that goal that they care so much about. And it's important to give the right feedback at the right time. And as I mentioned, this is also a great opportunity to upsell, because if you know what a person is dreaming about, what they care about, and how for how long they're planning to save for that, that's a great insights for financial institutions to have, because it tells them that, well, maybe this user would really benefit from investing this money because they're planning on having it here for 15 years. It would make a huge difference to invest that money. Or this one is planning, saving towards buying a house, well, maybe they will be particularly interested in a mortgage offer, for example. And thinking about investments in particular, we also see that this way of saving can really help reduce risk aversion that is involved with investments. Because we know from research that experience tends to trump behaviors, the description experience gap. So we have this greater fear of certain large, like all or nothing decisions compared to many small cumulative decisions. So if we take many small risks that might add up to a similar risk, it doesn't seem as scary because we get to experience taking that risk and seeing the potential benefits of taking that risk as well. So being able to communicate to a user, well, you don't have to put all your savings into this investment portfolio or this investment product. Rather, you can start small. Start, instead of buying that takeout coffee, going to work every day, why don't you put that money aside and invest that? It doesn't become as scary to people because it's money that they see that they would have spent otherwise, that they would have lost otherwise. And we can then help them see, but by changing the behavior, you will not only save that money, but it can actually grow and it will benefit you, significantly greater in the future. So finally, then, what do we know about the impact of our products? So we have done numerous studies on this. We've done studies together with academic researchers at Linköping University here in Sweden, more in depth, where we asked users to fill in surveys when they first became a user with us, and then 2 months after, and then following up again 2 years after. But we also continuously follow, of course, metrics within users of our different clients to see how this, holds up in different markets, in different cultures, and what we can learn and improve from that as well. But what we do see today is very encouraging and it's something I'm very proud of, because we can see that we are actually boosting financial well-being of users and we're activating users. We see that in research that we did here in Sweden, we saw that 28% of those using our product, they had no savings before. So we managed to actually speak to them and activate them in a way that, normal bank products had not been able to do. And that's amazing to me, because that really shows that if we are able to just change that behavior to at an early stage, that can have such huge impact in their lives going forward. And we see that those who had a saving before starting saving with us, they actually start saving more. On average, they save 2,000 euros more. These are also numbers based from the Nordic countries, Sweden and Norway. So we managed to motivate these users to change behaviors in a way that help them find more money to save towards what they find important. We see 6 to 8% of monthly income consistently saved across different countries, particularly Sweden and Ukraine in this instance. But then also looking at the emotional connection to their finances and the stress that I talked about, we do see improvements. The two-thirds actually feel less stressed about money just after 2 months, just after probably like helping to visualize what they're doing towards improving their finances. That has such an important effect, and that, as I mentioned, will help improve self-efficacy, and help them set bigger goals going forward. Because they feel more confident as well. 59% report feeling more confident, and 74% feel more positive about their finances in general. So these are very encouraging numbers, and something I'm very proud to be able to present and feel that we have actually contributed to. That's what I wanted to talk to you about today. So I'll be very happy to continue with the questions and discussions going forward. Thank you very much.